The Biden administration is currently itching to create a digital authoritarian-styled surveillance-style digital dollar. And through an executive order, they are pursuing analysis on a retail CBDC that would not be open, permissionless, or private. In fact, it would be ridden with significant risks to Americans' privacy, security, financial inclusion, and a whole lot more. This kind of digital currency would give the federal government access to and control over literally every financial transaction conducted by Americans. That's why I, along with a number of my colleagues, introduced the CBDC Anti-Surveillance State Act.
All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today we got a little bit to go through. You can see that the people inside the government, yet outside of the central banks, are slowly but surely starting to work out that these CBDCs are bad for them, just as they are bad for the common Joe. Also, please don't make the mistake of thinking that it can't happen here, because the Bank of England has advanced with its digital pound CBDC, saying it'll be a safe place to store cash is no longer fully functional, according to the Deputy Governor. So the UK needs Bitcoin. It really, really needs Bitcoin. If you don't opt out of this system with physical Bitcoin, gold, and silver, whilst you still can, then we're likely going to get a repeat of what we've been seeing in Nigeria in the not too distant future. Over in the equity markets, Minovini puts it perfect here. He says the market indexes enjoyed a nice junk off the low rally in the beaten down names, and then the subsequent pullback, which we are currently in the middle of. This is normal during this part of the cycle. And while there has been some names working from constructive bases, i.e., you know, when I go onto my charts and I draw that little square, this is, by the way, Minovini's technique, drawing the box, and then you buy the breakout above the top of the box. So whilst there have been some names working from constructive bases, i.e. Tesla, for example, putting in his box, let me just hop into the chart just so we can be really clear what I'm talking about. So as you can see, this is what counts as a base, okay, this box here. So there's some constructive looks where they're consolidating inside this base, looking to break out above the top. So this is a constructive look if it can follow through, and there are plenty of stocks doing that, which is what Minovini is talking about here. Volatility around breakout levels in individual stocks has kept Minovini from getting aggressive, and me too. You've seen me de-risk massively, you've seen me take a lot of exposure off and sit mostly on a neutral position. Minovini is also still waiting for better conditions. And though those conditions may come at higher prices overall, he is perfectly fine with that. And that is because patience and discipline is what's required in this type of market. You must wait for the constructive and confirmed breakouts before pulling the trigger. So those times and those days will come, and they'll come shortly, I think, but they're just not quite here yet. Here are the highest correlation S&P 500 analogs. And as you can see, the highest 3-month correlation suggests we're about to go up towards all-time highs, as we did in 1965. The 6-month correlation, however, the highest 6-month correlation fractal suggests we're going down. The highest 1-year correlation says that we've got a big bull run ahead of us. And the highest 2-year correlation says we are about to come down and retest the lows one more time. So the big question is, bulls or bears, who is going to have their day this year? Remember, as per my YouTube videos, the decline into the cycle lows, which I believe we have just seen for Bitcoin and for the equity markets, their job is to flush sentiment and to lure in shorts, only to then go and scorch them. And I think that's what we're seeing. Not to mention, this recent rally, particularly in the equity markets, has wiped out excess downside betting. There was way too many retail shorts piled in the US equity markets. However, this has now collapsed and is right back down in the normal range. Furthermore, if you know nothing else, okay, always fade the dumb money. It is coming. Do you think we see new highs in 2023? And as you can see, overwhelmingly, people do not think this is possible. So this is the sentiment reset I was talking about exactly. So far, I've seen pretty much what I want to see. And also, I know there's this narrative going around of where's the liquidity going to come from? Well, I've got 4 slides here that will show you. First of all, a big factor for liquidity is corporate buybacks. Another big factor for liquidity increase is the Bank of Japan's unlimited QE. These digital money created out of thin air converted into US dollars for a carry trade. A carry trade, by the way, is when you borrow money at a cheap rate and then invest it into an asset that yields a higher rate of return than the interest on what you borrowed at, and then you pocket the difference. So the Bank of Japan, they can print their Japanese yen out of thin air, convert it to dollars for the carry trade, and then they can use it to invest in US financial assets, which in theory should return higher than the rate of interest they paid on the yen. So we're seeing that here as well. Look at this, a rapid rise in loans to buy JGBs around the same time the Bank of Japan held more than 50% of the Japanese government bonds. Furthermore, Japan and China have both restarted QE. The Fed and the ECB will likely have to follow in the not too distant future. Asian sessions are showing enormous liquidity increases. Hong Kong up 4% as of yesterday. And finally, the People's Bank of China has just performed the largest cash injection into the system that we have seen in a very, very, very long time, in multiple decades. The Hang Seng was up 4% as of last night as well. This is an unreal amount of liquidity that's just flooded into the markets. Here is the S&P 500 on a monthly chart. Breakout, retest, looking for that resumption higher. Now, it hasn't done it yet, and it would need to clear this prior high for me to say, yep, it's go time. But here it is, looking to resume. Now, can we get the resumption? Of course, we haven't had it yet, but if you look at the MACD, that wants to turn up, the stochastic RSI looking to resolve higher, and the RSI appears to have put in some level of base looking to emerge from said base. It's not often these setups come around. The last time was all the way back here during the C19 plunge. There's still a little work to do, but if we can get a resumption candle going into next month, then things will start to look incredibly constructive for the US equity markets. Over in the world of Bitcoin, Bitcoin continues to just simply not care. Bitcoin never cares, does it? And I love that about Bitcoin. Amidst the bear market, the number of on-chain Bitcoin stats that are breaking new all-time highs is massively impressive. If you only had access to network data, you'd likely be surprised to hear that Bitcoin's price is in a 60% drawdown from its all-time high. Here's a few notable all-time highs in Bitcoin land. First of all, the hash rate, as you can see, all-time highs for hash. The most promising scaling technology on the Bitcoin network, the Lightning Network, has reached an all-time high in Bitcoin locked-in channels. The growth of the channel capacity has slowed, but the small payments via channels doesn't necessarily require massive amounts of capital to scale. As you can see, the trend is up and to the right. We also have the illiquid supply. The number of Bitcoin that haven't moved in the past year has also reached a new all-time high. Over 67% of the network's native tokens have not moved in the past 365 days. People are buying this and they are holding it for the long term with high conviction. And lastly, what about adoption? Well, look at this. The number of Bitcoin accumulation addresses. So this is not just individual addresses. This is addresses that are accumulating Bitcoin, i.e. they have more than 2 on-chain inflows and 0 historical outflows. So this is addresses that continue to grow, and those types of addresses are continuing to grow. The number of addresses categorized as accumulation addresses is now just shy of 800k. Again, a new all-time high. And as you can see, the trend is up and to the right. So the health of the network is seriously impressive. The human brain is not suited for understanding exponential curves. It's not suited for being able to comprehend exponential curves. If Bitcoin adoption is now 1 to 5%, then we will enter the vertical of the S-curve adoption over the next couple of years. So on the left, which I'm about to show you, is log scale. Just means more exponential growth until 50% adoption. For the linear thinkers on the right, everything will change. Bitcoin might be substantially undervalued. So here it is on the S-curve, following its S-curve, about to enter the truly vertical portion. Now, if you are not familiar with exponential curves at all, if you've never worked with them, then this is the sort of thing that dreams are made of. The human brain is very, very poorly adapted to be able to comprehend exponential curves. And so you can see, if I hop back to the exponential chart, the pink here is Bitcoin's price. And now if I hop back to the linear chart, you can see that it's barely even started. It's barely even started here. So massive, massive, massive opportunity. We are still incredibly early. And how early are we? Well, in the year 2032, the block reward is going to be 0.78125 Bitcoin. So that means 18k today will give you 10 minutes of the whole world's mining power in 2032. Imagine what that will be worth. At a minimum, 150 to 200k. I would think this is actually low. I would think this is low. I would think we're much more likely to be in the low single-digit millions than the low 6 figures. That, of course, remains to be seen. One thing I do know, though, Bitcoin monthly, aka you weren't bullish enough. Check this out. Again, it's that same thing, isn't it? Breakout retest, looking for that resumption higher. MACD turning up, stochastic turning up, RSI ready to turn up. And so with all that said, let's hop into some charts because there are some interesting developments going on. First of all, the dollar, okay? Here's the dollar. Does this not look like breakdown, retest, looking for that resumption lower? So I'm not getting super excited about having seen the top of the dollar just yet, because we could certainly come down to this blue upward sloping support line that goes all the way back here, as you can see. And so something like this, a little touch of this line before then attacking the top of this, could certainly be about to unfold over the next coming weeks. Not predicting anything, just simply saying that this as it stands is too early to get excited. But there's no denying that we have indeed broken down, retested, and now looking for a resumption lower. If we could do something like this, then expect risk to come on absolutely massively. Either way, I think we are past the midpoint of this bounce. I think we have seen the worst of this move. Even if we're going to do something like this, that would be, in my opinion, as far as we could possibly go. Then we're going to get a sharp correction lower. And I would speculate that we're likely going to see it before this date at the end of March anyway. So one thing at a time, FOMC on the 22nd of March, that could well be the catalyst for the breakdown of the dollar. That, of course, remains to be seen for now. Again, the US 10-year yield, is this a consolidation before a breakout higher? Or are we about to follow in the steps of the dollar and see a breakdown retest resumption? Something I'm keeping my eye on and something you should be too. US government 2-year yield coming right into that double top neighborhood. So again, are we going to see a double top and a take profit? And then are we going to see this rollover? But if we can get these sorts of things, we can expect risks to come on strongly. Bitcoin has certainly, in my opinion, entered a new cycle here. So I was talking about this. I said I wanted to see a breakout, retest, resumption. I said I wanted to see a push off, a big, strong green candle. We have now officially got that. So you know what that means. So the first position I've kept, but I've moved the stop up to here for now. Now, if we can get above this cluster of highs in this cycle, if we can do something like that, then I will move this stop up to here. But for now, I just want to give this trade a little bit of room. So the first trade is managed. The first trade stop has moved up to here, meaning we've locked in a guaranteed profit. We've also got a new trade, a new position added here. So, and the stop for that at the moment is currently underneath here. So we're letting the profit from the first trade finance the risk from the second trade. This should not be a surprise to you at all. If you've been watching the channel for a while, I've been talking about this for absolutely ages. So we definitely don't want to lose this low from back here. That's why the stop is just a little bit below that prior low. That should form a day 57 cycle low. And we definitely don't want to see this level taken out, because lose this level and we will have a very early failed cycle. So for now, I remain constructive. I remain long. We've pushed our first position. We've managed it. And now we've added exposure. And of course, the same is true for Ethereum. So it's the same deal for Ethereum. We've moved the stop up from the first position. We've locked in some profit there and we've reduced the risk, but we have still added. The stop is under here. We certainly don't want to lose this low from back here, but this, I'm fairly confident, as confident as I can be, that we are going to see this resolve to the upside over the coming days. MATIC, just about being able to push MATIC. So not much more to say about that apart from long and strong continue to push. Of course, if Bitcoin is going to go like I think it's going to, then we should be able to get a breakout of this any day now, and we'll see this resolve to the upside. So looking to continue to push MATIC. Zcash still doing a whole lot of nothing. I'm not going to add any position to that. I've got full exposure. I'm happy with what I got for Zcash. Just for a bit of fun, here's the Bitcoin fractal chart. So are we going to see this explode higher? Are we going to see this start to catch this fractal up? Or are we going to put in a much more slow and gentle climb? That, of course, remains to be seen, but I think for the now, we can say that this is broken away. It was only for a bit of fun anyway. We're, of course, never trading from that. The Wyckoff chart actually looks pretty constructive and set to blast off out of here. So can we get that? Can we get this climb, this ascent into phase E? That's what I'd like to see over the coming days, and this would have turned out to be a very good read. For now, long and strong continue to push on all the crypto assets. You know what that means as well, right? So here's Coinbase, clearly broke out on a daily and closing basis as of yesterday. So that was a little subtle hint, wasn't it? I do think we can add a position here as we open up today. I do think we can move the stop up to somewhere in this neighborhood. And then we can look to see how high we can go over the next 60-day cycle. The exact same template can be copy and pasted onto MicroStrategy, of course. We could possibly add a position here and look to ride the next 60-day cycle. So we'll see how the open goes. Riot is the same deal, of course. Probably looking to move the stop up to at least there, if not higher up, and then see what we can do from there. And the same is true of Marathon. I think we can move this stop up to here just to take some risk off of the table and make sure we're not going to walk away with any horrible losses. If we can get a nice strong push off of here, let me take this off a log so the line fits better. If we could get a strong push off of here today and then start to work our way up, then the stop can come up underneath this low, and that would be no problem at all. So we'll give it a little bit of space, see what the market can give, see if we can push off of this. And finally, I can stop repeating myself on all of these positions and just look to see what the next 60-day cycle comes with. As I said at the start of the video, break out above the top of here, and that would be a constructive look. But I also think if it's going to chop around in here, one, it could do that indefinitely. It could do that for a long time. So definitely not looking to rush in here. But two, if it loses this upward sloping support line, that would be the first early warning sign, wouldn't it? So if we lost this and then particularly lose that and break down, this could be a short targeting new lows. So do I think that's possible? Yes. Do I think that's likely? Not necessarily. However, Apple at the moment seems to be breakdown, retest, resumption after breaking down from this upward sloping support line. So perhaps Apple showing relative weakness here and could be looking for further downside. Perhaps this is going to recover over the coming days, and then we can look for to entertain longs on a break above the top of this. But this is exactly what Minavini was talking about at the start of this episode. Constructive looks would be forming a base, ready to go out the top. And a deconstructive look would be what we're seeing here from Apple. Anything can happen. It's certainly early, but that's what I'm looking at the moment. Nice action out of the FTSE 100. I'd like to see this continue to just sort of respect this red downward sloping resistance line I've drawn. I'd like to see it continue to respect that for a while, get a nice flush down here, perhaps even to sweep these lows, and then we can look to buy that breakout. So one day at a time. For now, playing patient. I, of course, will update you if I change my mind. Russell 2K, holding where you'd want it to hold. So far, so good. Want to see it clear this downward sloping diagonal blue line that I've got drawn. If we can get out of there, that can be a long for me. And it's a very similar setup on the NASDAQ, isn't it? So holding where we want to hold for now, looking to break out of this downward sloping purple resistance line. If we can do that, that would be a long for me as well. Dow Jones showing relative weakness, isn't it? This is now breakdown, retest, second retest, looking for a resumption lower. So the big question is it going to sweep the lows under here? If it does, do we get stopped out? Do we close below this downward sloping blue bear market resistance line for all of 2022? The VIX is telling us not to expect any sort of stock market plunges, at least not in the near future. So this can change, and it can change quickly. You know, break out of here and we can start to entertain a stock market crash. But for now, this just appears to be considerable VIX compression. This is telling us that we can expect further upside from the stock market. And having a good read on this VIX here is also what we did back here, remember. All the way through here and here, we were able to capture the upside stock market rallies when everybody else was bearish. And the reason for that is because the VIX just simply would not spike. Yes, we had a little bounce here, and it appears we got a little bounce here. But so far, not speaking to a volatility event like we've seen over and over again. So being able to just stay unbiased and flexible, being able to read the VIX is what's enabled me to profit from the longs in the stock market, particularly when everyone else is bearish. So everyone appears to be bearish again. The VIX not telling me to be concerned at this moment in time. Could certainly change, and it could change quickly, but it hasn't changed yet. And here's the S&P 500. So kind of just hanging around in no man's land, similar sort of setup, coming in for that retest. I do believe we've got a cycle low, so I think we should be able to resolve higher. Are we then going to have to come down and build a bigger base here? Are we going to end up with like a much bigger sort of double head and shoulders like that? Quite possibly. I'm open to anything, but for now, we're still long, we're still respecting our stop, so not much more to say about that apart from long and strong continue to push. As I said earlier, the VIX not really speaking to a stock market crash, at least not yet. Okay, this is natural gas, so this is close to being a long for me. I'd like to see a convincing backtest and resumption off of here, and then I can add a long out of here for natural gas. So I just want to make sure we don't get some sort of weak rollover. If we can definitely flip this into support and then perhaps break out, that would be very constructive look for me, and I would be more than happy to long that. So it's done most of the work. I wanted to make sure that I've seen this, we've seen this. Like I say, now we just need to flip this. So that's the analysis for today. I really hope you enjoyed it. Hit a like if you appreciate the work rate, or if you found value here today. Make sure you subscribe with the notifications turned on if you want to continue to get updates on all these markets in real time and how I handle them as a pro swing trader, including setups called out for free well ahead of time. Probably going to end up being another choppy week, but things are starting to look a little bit more constructive, at least in the crypto world. So I'll be looking to add positions as we open up into New York hours today for the crypto related equities. Looking to sit patiently and preserve capital in terms of index positions. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.